We are live.
Good evening to one and all participating in this one-day international webinar on Moratorium on Loan Payment, Effects on Financial Institutions, organized by the Departments of Commerce and Management Studies in collaboration with the Institute of Cost Accountants of India. Present here among us, we have Reverend Dr. Dominic Savio, SJ, Principal St. Xavier's College, Kolkata, CMA Balvinder Singh, President, the Institute of Cost Accountants of India, CMA Vishwarup Basu, Vice President, the Institute of Cost Accountant of India, Dr. Taposh Chandrapal, CFO, Mercantile Bank Limited, Bangladesh, Chichonchol Mojumdar, former GM, Credit and Recovery, UCO Bank, and Dr. Debo Prashanna Nondi, Senior Director, the Institute of Cost Accountants of India. We are truly privileged and honored to have such eminent personalities among us here this evening.
Welcome to this webinar organized by St. Xavier's College, Kolkata, Department of Commerce and Management Studies, in collaboration with the Institute of Cost Accountants of India on the theme Moratorium on Loan Repayment, Effects on Financial Institutions. With due permission from our Father Principal, let me introduce the topic in a nutshell. As we have experts in this field, we'll be speaking on this issue in details in the course of their deliberations in this webinar. Respected Father Principal, Reverend Dr. Dominic Savio, respected guests and speakers, respected professors, research scholars present, and the students. Due to the COVID-19 pandemic, there was a nationwide lockdown for more than 2 months, leading to a severe disruption of economic activities across the country. And still, we are not out of this crisis. To provide relief to these borrowers, the RBI provided regulatory forbearances in several ways, including moratorium in the repayment of principal interest both falling due between March and August 2020. However, during this period of moratorium, banks and non-banking financial institutions continue to charge interest on the outstanding loans as their funds continue to be utilized by the borrowers. Borrowers had the option to avail themselves of deferment if they are willing to bear the burden of interest during moratorium. A bulk of borrowers have accepted the terms and conditions of the moratorium. Hence, there is no violation of any contractual obligation. However, a public interest litigation has been admitted in the Supreme Court seeking the waiver of interest payment during this moratorium period. The legal issues are mainly two: payment of interest and interest on interest. According to the banks, they are not charitable organizations, and if they do not earn, they may find it difficult to serve the depositors. Although the RBI has not yet agreed for an interest waiver, it has compensated both lenders and borrowers by way of low-cost funds. In fact, the government's Atmanirbhar package is largely borrower-centric. It would be unfair to believe that borrowers have been left high and dry during COVID-19 crisis. These are unprecedented times, and it is a time that we need to be together to fight this COVID-19 crisis. With these words, I would like to request our Father Principal, Reverend Dr. Dominic Savio, to deliver his welcome and keynote address. Yes, Father.
Thank you, Professor S.K. Basu. Can you hear me?
Yes, Father, 100%.
Thank you very much for a nice introduction. Thanks to Professor Ruby for welcoming all the speakers and everyone participating in this national webinar. Once again, very good evening and welcome to all of you. It is my pleasure in welcoming participation from different participants from different parts of India and Bangladesh in the international webinar conducted by Department of Commerce and Management Studies on the issue Moratorium on Loan Repayment Effects on Financial Institutions. St. Javier College, Kolkata is a metaphor for commitment, care, and service. During this hour of need, when the entire world is passing through difficult times, our institution is coming up with innovative ideas and accessible avenues to make this time meaningful and productive. As per the statement of developmental and regulatory policy of the Reserve Bank of India on 27th March this year, all commercial banks and other financial institutions are permitted to allow a moratorium of 3 months on payment of installments in respect of all term loans outstanding as on 1st March 2020. In the month of May, RBI further extended the period till 31st August 2020. However, the interest shall continue to accrue on the loan amount. The deferment in the loan repayment will neither incur penal charges nor would it impact the credit score of the customers. The relief provided to the borrower through the decision of loan moratorium has several effects to the financial institutions. The policy decisions of the government can better be analyzed by the persons from the industry itself. Department of Commerce and Management Studies always try to bridge the gap between industry and academics through the programs which involve experts from the industries to share their experiences and views with the participants at large. In today's webinar, we have eminent speakers from the industry like Sri Sanchal Majumdar, former General Manager, Credit and Recovery of UCO Bank, and Dr. Topas Chandrapal, Chief Financial Officer of Mercantile Bank Limited, Bangladesh, throw light on the topic. I am glad that St. Javier College, Kolkata has collaborated with a professional body like the Institute of Cost Accounts of India and hope we would continue our association in such endeavors. I am certain about the fact that such a webinar would help the participating students, faculty, members, and corporates to gather knowledge on this pertinent issue. I convey my best wishes to make this webinar a successful one. Thank you very much. May God bless you.
Thank you, Father. Thank you for your welcome address and in a brief and nutshell about the moratorium scenario that is prevailing at present. May I now request CMA Balbinder Singh, President, the Institute of Court Accountants, to deliver his inaugural address.
Very good afternoon to all of you. Honorable Father Principal, Reverend Dr. Dominic Savio, SJ Principal, St. Xavier College. CMA Bishro Basu, Vice President of the Institute of Cost Accountants of India. Dr. Tapash Chandra Paul, CFO, Mercantile Bank Limited, Bangladesh. Shri Chanchal Majumdar, former GM Credit and Recovery, UCO Bank. Dr. DP Nandi, Senior Director of the Institute of Cost Accountants of India. Dr. Sanjeev Kumar Basu, Professor Ruby Mary, Subsidiary Organizing Secretary, other colleagues, faculties, and Department of Commerce, Management, distinguished guests, ladies, gentlemen, and students. It's a pleasure and honor to be at this one-day international webinar on moratorium on loan payment effects on financial institutions. Dear friends, most NBFCs carried adequate on-balance sheet liquidity as on 31st March 2020, which along with access to the funding lines would be sufficient to meet their 3-month requirements. The data is in accordance with the report of one of the rating agencies, ICRA. However, when the second extension for a moratorium was given till August 2020, that may result in adversely impacting their collections than what was originally anticipated. Although not all lenders have extended a moratorium to NBFCs, still NBFCs assets under the management is under repayment moratorium is quite significant. Also, the moratorium is not applicable for market instruments, which account for 35 to 40% of the outstanding borrowings. While fresh sanctions from the lenders, which includes financial institutions like SIDBI, NABARD, NHB, are in the various stages of approvals, the liquidity profile of NBFC, especially the low-rated and small entities, could witness headwinds in the event of any delays in securing further fresh fundings. NBFCs are estimated to have close to 6 to 6.5 lakh crore of long-term debt maturities in the current fiscal. Non-convertible debenture maturities estimated about 2.6 lakh crore, and while the bank loan maturities are estimated at 3 lakh crore during the current fiscal year. This is apart from the commercial paper, for which the maturities are about 1.2 lakh crore. Of these total non-NCD maturities of NBFCs, which is basically low rating category A plus and lower, excluding the increased default, is only about 11 to 12%. The extension of moratorium would also negatively impact loan sell down volumes, which emerged as key funding avenues for NBFCs since third quarter of 18-19, with banks being the largest investor segment in the category. As per the CRISIL, the lockdown and subsequent policy measures, including the moratorium, will have varied impacts according in different sectors, different impacts. While corporates benefit by conserving cash, financial institutions are facing double whammy in terms of limited collections and no moratorium on capital market instruments. Recovery after lockdown will also be varied as per the different sectors. For instance, CRISIL expects power distribution companies to experience likely weak collections, but this will be partly offset by being the essential service and moratorium on payments to power generation companies. CRISIL further said that NBFC during the moratorium provided by RBI, NBFCs may face asset liability management challenges due to higher proportion of capital market borrowings. And however, any restructuring or instrument permitted by the investor will be helping elevate the pressures on the repayment. And according to the Motilal Oswal research, with the high stage 2 loan ratio, which would have most vulnerable from the lockdown, would be benefited the most from the moratorium. In addition, it is important to note that NBFCs would also get relief on their bank loans. Almost 35% of the total borrowings for NBFCs. Our borrowings are from NCs, commercial papers, deposits, which will not come under moratorium. That Motilal also further have estimated that the average of 8 to 12% liquidity on the balance sheet for most NBFCs, they don't face any or foresee any major impact on ALM from moratorium. With these few thoughts on the topic, I look forward for fruitful deliberations and interaction and wish this event a great success. And before I hand over to the organizer, I have to just discuss with the students being here that the Institute of Cost Accountants of India, though set up 76 years back, has changed its curriculum, and it changes the changing the sense of everything. And this year we have taken a robust decision to see that more and more employability skills are given to the students. We have introduced 4 inbuilt courses within our curriculum that all the students of intermediate will be given SAP training without any separate fees to be charged from a student itself as a normal. And this SAP training will be of us 60 hours training by the official SAP with the official certifications, and further the similar hours will be given by our office also, our institution also. In addition to this, we have tied up with the Microsoft, wherein the Microsoft Word, Excel, PowerPoint, Access trainings will be given along with the original certifications from the Microsoft. The third training, which we have introduced this month only, from 10th August, we have introduced these things. The third is the Cambridge University Employability Skills training we have introduced. And the fourth is filing of all possible returns like the GSTs, income tax, and PF, ESA, and other returns. The fourth certification from the original software developers, along with the training from the institute, is the 4 new things we have added, so that our students, when goes to the employment or own practice, is ready to work from the day one. And here I have to make just one more announcement today that we have reformed our student services portal, and today I dedicated a student to the new renowned portal. From now onwards, the student can access all their services online in the new portal. Maybe it's the online classes links, or maybe the administrative matter. Everything is available at one click. With this, I'm thankful to all the participants for being with here, for being at the joint event of St. Xavier College and the Institute of Cost Accountants of India, and I look for fruitful derivation. Thank you so much.
Thank you, sir. We are really enriched with your deliberations. Now I am requesting CMA Vishwarup Basu, Vice President of the Institute of Cost Accountants of India, to highlight some of the relevant issues relating to moratorium of loan repayment. Over to you, sir.
Respected CMA Balgin, President of the Institute of Cost Accountants of India, Dr. Taposh Chandopal, Sri Chanchal Majumdar, Dr. D.P. Nandi, my beloved professional brothers and sisters, my beloved students, ladies and gentlemen. It gives me immense pleasure to be present here today and to address you. I'm really privileged. St. Xavier College is one of the best colleges in India. I'm addressing you at a time when the whole world is suffering from the impact of COVID-19. Post-COVID-19, it will be a new normal. The basic objective of such virtual seminar is dissemination of knowledge and to imbibe wisdom and values. I appreciate the endeavor taken by St. Xavier College and the Institute of Cost Accountants of India to organize an international seminar on a topic which is quite interesting. We are thankful to note that the Reserve Bank of India has announced relief measures to mitigate the debt servicing burden of borrowers on account of disruption due to outbreak of global pandemic COVID-19 by circular dated 27 March 2020. It has further issued circular dated 23rd May 2020 announcing the relief measures for extended period up to August 31, 2020. The same guidelines apply to all credit facilities granted to periodic repayment date of principal and of interest falling between March 2020 and May 2020, and during the extended period up to 31st August 2020. The bank would provide separate terms and conditions for different types of loans. Other credit conditions in the sanction letters already issued would rather remain unchanged. The bank will also offer to all borrowers who wish to avail the facility of moratorium on term loan installments falling due between March 1st, 2020 and May 31st, 2020, and during the extended period up to August 31st, 2020, as well as the payment of interest for the months of March to May 2020 and for the extended period from June 2020 to August 2020 on working capital facilities. Interest should be charged at the original contracted rate during the moratorium period on the outstanding amount of loan to all those who avail the said credit measures. This interest has to be paid by the customers on completion of the moratorium period. It is to be noted that the granting of moratorium is at the sole discretion of the bank. Merely applying for the moratorium should not be constituted as granting of the same by the bank. I will not take much of your valuable time. I will only say that the Institute of Cost Accountants of India is a premier accounting institute recognized by an Act of Parliament. It is set up under the Act of Parliament. We are having 85,000 members, 5 lakh students, and we are having 100 chapters and 10 overseas centers. We are having 15 elected council members and 5 members nominated by the government. The objective of the institute is to develop cost and management accountancy function as a powerful tool of management control in all spheres of economic activities. The objective is also to promote and develop the adoption of scientific methods in cost and management accountancy. Our vision statement is the Institute of Cost Accountants of India will be the preferred source of resources and professionals for the financial leadership of enterprises globally. Friends, I would not take much of your valuable time. We are passing through a crisis, but every crisis brings in opportunity. So I believe now social distancing, social distancing has become the order of the day. We have to adapt to change. Change is the essence of human civilization. We also need to learn new techniques like artificial intelligence, blockchain, cybersecurity, data analytics, etc. I pray to God for your health, happiness, and prosperity. I also wish the seminar a grand success. Thank you very much.
Thank you, sir, for highlighting such potent and pressing issues before us this evening. Thank you for your address. We now move to our first technical session and welcome Dr. Taposh Chandrapal, Chief Financial Officer, Mercantile Bank Limited, Bangladesh. Dr. Taposh Chandrapal has around 20 years of diversified experience in the banking sector. Prior to his current appointment, he served at different divisions of the bank at different capacities, including head of division. He writes insightful and informative articles regularly on banking and economics in the widely circulated national dailies. Welcome, sir. The screen is all yours.
Thank you so much. Hello, everyone. Good evening. I hope all of you are staying safe and healthy during this pandemic situation. First of all, I would like to thank the Department of Commerce, St. Xavier's College, and Institute of Cost Accounts of India, ICAI, for jointly organizing this one-day international webinar. Especially thanks to the advisory committee as well as organizing secretary, Professor Saptoshi Rai, Next, I would like to thank the esteemed gentlemen who are delivered wonderful speech before me. Dean of Commerce, Dr. Basu, Honorable Principal St. Xavier's College, Honorable President ICAI, and Vice President ICAI. As we all know, we are passing through a very critical time with the worldwide outbreak of novel coronavirus. Before starting, I would like to offer my prayer to the Almighty and express deepest condolence for the people who have lost their life. I also wish early recovery for those who are still fighting against the deadly virus. The pandemic has brought severe economic hardship on millions of households and businesses. In response, government have introduced a range of fiscal, monetary, and financial measures to support the affected individuals and businesses. Today, we are going to discuss a very specific measures that has been taken by national authorities in many jurisdictions to sustain economic activities. Our today's topic is moratorium on loan repayment effect on financial institutions. At first, we want to know what is moratorium. Imagine you have a one-story building in which you reside at present. Now, you want to make it to a six-story building for generating rental income, but you have not enough money to make up to six-story building. That's why you need financial support from the financial institution regarding the issues. Mention may be heard that the six-story building can never be built within a single day or week, even month. You need minimum 6 months to complete the construction work and rent out the apartment. During these 6 months, you will not get any return from your investment, and therefore you will have to cash flow to pay your loan installment. To solve this problem, moratorium comes in. In this situation, the financial institution offer you a 6-month moratorium period. That means you don't have to pay right now. Your payment schedule will start right after 6 months when you start to generate your cash flow by rental income. In simple words, moratorium is a payment deferral facilities which is provided by the financial institution to the borrowers. It can be reflected as a provide grace period for the loan repayments as credit holiday or as a loan repayment tenure extend for the financial institution's borrower. At present, these measures aim to alleviate the cash flow pressure to distressed corporate and individual borrowers affected by COVID-19. During this time of crisis, government of many countries, including India, took these measures to sustain economic activities. In our today's session, let's discuss the topics bit by bit. One, what is loan moratorium? Second, example of countries regarding moratorium. Third, why the loan moratorium period is given. Fourth, why the moratorium of loan repayment is important. 5, treatment of loan after moratorium period. 6, difference between loan moratorium and grace period. 7, effect of loan moratorium on borrower. 8, effect of loan moratorium of financial institution. 9, risks associated with credit moratorium for financial institutions. 10, impact level of moratorium on different borrowers. 11, practical consideration regarding credit moratorium. Dear participants, in the meantime, we have already discussed the definition of moratorium and tried to illustrate by drawing an example of house building loan. Now, we would like to elaborate the definition of moratorium period through discussing three key terms which are interrelated with moratorium. First of all, an EMI holiday, which means the borrower does not have to pay an EMI during this sanction period of time. Secondly, temporary relief provided by the financial institution to its customer. Thirdly, certain conditions are required to be fulfilled. Then let's discuss on duration. In fact, the duration of the moratorium mainly depends on the decision of the financial institution with intervention of regulatory bodies of the country. It may differ country to country. In India, you are already aware that RBI has set a moratorium period up to 31st August 2020. In Pakistan, 1 year moratorium period allowed by State Bank of Pakistan. In Bangladesh, the Central Bank of Bangladesh extended the moratorium period up to 30 September 2020 in consideration with pandemic situation. These are the scenario of developing countries. Now we would like to look at the scenario of developed countries. In Italy, 18 months moratorium period allows by the government. In USA, it up to 180 days. In Australia, Canada, and Hong Kong, declared it up to 6 months, while Spain and UK allowed it up to 3 months at this moment. Now, the question may arise, why does moratorium matter? The simple answer is to reduce burden of repayment at the start of the loan repayment cycle. We have already discussed an example of house building loan. In this regard, we would like to say another example. Suppose an entrepreneur is going to set up an industrial plant for which he needs new machinery, raw material, human resource, and market also. To purchase the machinery, he requires bank's finance along with his own equity. If they procure the machinery locally, it will be easier. But if they procure the machinery from abroad, some formalities are required, like searching foreign supplier, LC opening, shipping, completing customs procedures, and installation. It means it will take time. There is no scope of repayment immediately. He will be only capable to repaying the loan after selling finished goods through following a sophisticated procedure of installation, production, and rigorous selling and marketing activities. Hence, he needs a certain period of time, which is provided through moratorium period. Why the moratorium period is so important in this COVID-19 pandemic situation? In fact, it is a very timely issue all over the world. It has vital role to keep the economy revived. You are already observed that COVID-19 has brought this stage in every sphere of our life. Most of the business even face difficulties in managing working capital and disbursing salary of employees. Many employees are facing salary cuts. Source of income of most of the people is jeopardized. In this crisis moment, moratorium period provides opportunity for businessmen to manage working capital properly and run the business operation in this adverse situation. On the other hand, it allows more breathing room for individual borrowers amid the COVID-induced cash crush. I am now bringing your attention for two types of treatment of loan after moratorium period. One is higher EMI, another is longer tenure. You sometimes may be confused with the terms grace period and may intermingle with moratorium period, but there are certain differences which we would like to tell you. First one, a grace period is a gap between billing period and payment period, whereas a moratorium period is when the lender allows borrower to stop making payment for a specific period of time. Another basic difference between grace period and moratorium period is imposing interest. No interest is imposed in case of grace period, whether interest is accrued during the moratorium period, which is paid later. The classic example of this is credit card. Generally, credit cards around the world give the borrower about 45 to 50 days. In some cases, 21 days also of grace period before charging interest. Now, we would like to elaborate the effect of credit moratorium on two perspectives. One is borrowers, another is financial institution. We will discuss the effect on borrowers' perspectives in both positive and negative side. Positive effect for borrowers. First of all, no downgradation means no classification. Recently, Delhi High Court has been a ruling that there will be no downgradation of the status due to the moratorium. Second one is the issuing bank or financial institution will not block the credit card or similar kind of loan account in which the moratorium has been provided. Next, no late fee will be charged. Then, negative effect for borrowers. It's natural that the cumulative interest will be more than the normal interest due to moratorium period. The issue can be illustrated through a simple example of credit card with 10,000 rupees bill outstanding. In general, interest will not be waived as you have made this payment within the due time or due date, which is called grace period. But if the credit card holders take 3 months moratorium facilities, the financial cost will be 1,128 rupees. Here, 128 rupees added as an interest for moratorium period. Now, I will discuss about both positive and negative effect of credit moratorium on financial institution. Positive effect, earn a little more interest. Secondly, the asset do not become downgraded during this period. Negative effect, the bank and financial institution manage the liquidity by matching outflow with inflow. It is likely to generate. That's why credit moratorium will negatively affect the liquidity of the banks or financial institutions. Secondly, during the moratorium period, customers are not getting downgraded when it comes to their credit score. After the moratorium period ends, and if the adverse situation continues, then quite a number of customers may default at a time. As a result, profit will drastically fall. Everybody knows risk is everywhere, but financial risk is very critical as it create adverse situation. On the basis of previous negative effect, we can easily assume two major risks, liquidity and credit associated with credit moratorium for financial institution. The term risks may be elaborated as R denotes rules, I denotes identification, S for strategy, and K for knowledge. If we comply with rules, there is no risk, whereas if we violate rules, it will generate risks. If the issue are identified properly, there is no risk, whereas if unidentified, it will create risks. If right strategy taken, if will be taken for the entry of the other hand, if wrong strategy taken, it will create risks. Educate knowledge, maximize the risks, whereas lack of knowledge generate risks. First one, liquidity risks. Bank and financial institution can fall into liquidity traps because of moratorium. As we have seen, the central bank have rolled out quite a few initiative plans like reducing the SLR for trying desperately through various measures to inject liquidity into the economy. This will help the financial institution for 6 to 9 months. But after that, financial institution will need fresh liquidity. So if the repayment do not come as expected level, it can lead the institution to a liquidity trap. Second one is credit risk. If the facility is given to the customer without properly assessing the credit risk, the financial institution can find themselves in trouble. There are three impacts of moratorium by customer categories. Category A, no impact. For borrowers who are able to commence their work normally and quickly get their cash flows in pace, the repayments will start realizing the pressure on the liquidity position of the bank. Category B, medium impact. For borrowers who will take time to get their cash flow in time would come back to the banks asking for an extension or default for the initial payments, but over a period of time would meet all their commitments. Category C, large impact. For borrowers who are unable to restart their cash flows or default, and their recovery would be depends on when and how they are able to restart the business. If there are a large number of cases in this category, it would hurt to economy as well as the bank. Category C sector will be more like travel, hospitality, entertainment, and manufacturing plant that will take more time to restart sectors. That will face demand issues like the apparel industry and so on. Practical consideration regarding credit moratorium. Moratorium or credit deferrals increases future risks to both borrower and banks, as the missed payment are not forgiven and must be repaid. This can lead to a situation where the missed interest payments are added to the loan balance, resulting in a higher debt repayment burden for borrowers once the repayment holiday period ends. At the same time, this allows banks to recognize interest income on this missed payment, raising prospective risks if borrowers are ultimately unable to repay. In addition, if the payment moratorium is lengthy, the deferred interest payments that are added to a borrower's loan balance and the corresponding amount that are recognized in banks' interest income accounts will increase, accentuating medium-term risks for borrowers and banks. The extent to which these risks materialize and how they affect the accounting classification and measurement of loans depends on two factors. First, the borrower's ability to repay the debts. One, the deferral period ends, and second, the availability of collateral support or security support, including the existence of public guarantee that bank the underlying exposures. In this context, it might be helpful to distinguish three groups of borrower by considering solvency and liquidity. There are solvent to solvent but illiquid, third of one insolvent. The design of credit moratorium will be critical in balancing the short-term needs of borrowers with longer tenure financial stability consideration. In particular, the financial stability implications of this will be driven by the extent to which borrower will be able and willing to repay their debts obligations once the payment holidays expire, particularly in the absence of a public guarantee. The cumulative impact of COVID-19 and credit moratorium of bank balance sheet depends on many factors and will only become apparent over time. Therefore, the timely classification and measurement of credit risks is critical for banks to provide confidence to supervisors and their stakeholders on their financial health. Delaying loss recognized until the tide goes out may leave banks and supervisors with fewer options for dealing with the repercussions. I express my gratitude to all of you for selecting me as a speaker in this international webinar program. I also feel proud, honored also to be a part of this seminar and get an opportunity to share my knowledge with all of you. Last of all, I believe when it rains, it pours, but soon the sun's shining again. Better days are on their way. I hope these gloomy days of this pandemic period will disappear soon with our combined effort. I would like to express thanks once again for listening the session patiently. I wish all of you happy, healthy, and prosperous life. Thank you. Thank you all.
Thank you so much, sir, for taking time out of your busy schedule and enlightening us with such an informative session. You have highlighted the theme of the webinar with respect to the global aspects as well as from the point of view of Bangladesh and explained it in the most elaborate manner possible, covering all aspects in depth. It was indeed a pleasure listening to you.
Thank you.
Thank you, sir.
Thank you.
For our second technical session, we now welcome Shri Chonchol Mojumdar, former GM Credit Recovery, UCO Bank. Shri Chonchol Mojumdar retired as a senior most general manager of the UCO Bank and head of the Credit Monitoring Department, along with the head of Stressed Assets Management vertical, having more than 5.5 years experience handling all sorts of borrow accounts under stressed special mention accounts. He holds experience as a zonal manager of Mumbai, the largest zone of the UCO Bank in India. Having devoted more than 36 years of his life to the banking career, in addition to having rich experience in acting as branch heads in different capacities, he has worked for more than 18 years in credit appraisal and project financing, credit monitoring, stressed asset management area. We welcome you, sir, and we are indeed obliged to hear you speak. Over to you, sir.
Good evening to you all. Honorable Dr. Domenico Savio, Father and Principal St. Xavier's College, Dr. Sanjeev Kumar Bosu, Dean Postgraduate Studies, St. Xavier's College, CMA Sri Valvinder Singh, President ICI, CMA Sri Bisharu Basu, Vice President ICI, Dr. Tapos Chandopal, CFO Mercantile Bank Limited, and Honorable Speaker of this seminar, and all other distinguished professors, readers, lecturers, teachers, and students of St. Xavier's College and other participants present here. At the outset, I convey my sincere thanks to St. Xavier's College Authority for inviting me in this webinar, which is in today's context is very relevant and well-timed. Honorable Speaker Dr. Pal has already covered, discussed, and touched upon about what is moratorium, its theoretical part, and risk areas. And all other speakers prior to that also covered certain aspects in their introductory note. I will restrict my deliberations about the measures announced by RBI, the regulator of Indian banking system, time to time in regard to moratorium to address the financial stress caused by COVID-19 pandemic, so as to enable Indian financial institution to keep their books in order, its implementation, and its far-reaching effect on the health of the banks vis-a-vis borrower and other lending institution with some real-time scenarios example. As all you know by this time, that moratorium is nothing but repayment holiday, or in other words, it's a deferment of repayment obligations of the loans raised from banking system or from other financial institutions. Let us now start my discussion with different announcement RBI made over a period of time, right from March 27th, 20. They have got first announcement wherein they are first announced about 3 months moratorium from March to May, both for term loan and for the working capital. Term loan, you all know, where you have to pay the installment as well as interest, and for working capital, or you can say it's at cash credit or overdraft, whatever facility is there, you have to pay the interest. So for this installment and interest, RBI has given the dispensation that borrower can have the moratorium of 3 months. This is their first announcement. After that, RBI come out with their second announcement in 17th of April 2020. In that announcement, they have categorically stated, though we are permitting moratorium, but under no circumstances this moratorium will downgrade the assets. Friends, you are all aware that as per the present income recognition and asset classification norms, any loan, either installment or interest, if it's remain overdue for more than 90 days, it will be categorized as NPA in banks' books. But since at the behest of RBI, bankers are allowing moratorium for 90 days at the initial period, then Reserve Bank said, okay, since we are at our behest, you are allowing moratorium, so no the borrower's account will be treated as NPA, although there will be default for more than 90 days. This is the announcement, main announcement made by RBI on 17th of April. Then third announcement, that is the most vital announcement made by RBI, but RBI in 17th April make another announcement. They say, okay, we are allowing moratorium and you are not treating the bank assets as NPA, but since you are allowing moratorium, but you have to provide 10% provision. Mind that all the banks who are allowing moratorium, they will provide 10% provision on the outstanding balance of each and every borrower, and this 10% RBI given relaxation that 5% you can provide for in March 20 and 5% June 20. So all the banks in India, they have provided for this 10% during their last 2 quarters balance sheet. Now RBI come that most important announcement on 23rd of May. What they have announced? They are saying no, this pandemic is going to sustain for more time, so they are allowing further 3 months. So another 3 months, may total 6 months up to 31st August, they are allowing it as moratorium. Accordingly, repayment schedule will be got shifted. Tenor will be got shifted. If you are 10 years of loan, then it will be 10 years, 6 months. And accordingly, your repayment schedule will be restructured. So this is the second announcement made by RDR, but what our previous speaker, Dr. Basu mentioned and our father also mentioned, interest shall continue to be applied. Interest shall continue to be applied on the outstanding portion of both term loan and working capital. It will be capitalized and to be recovered in the residual installments. So friends, what RBI said that, okay, we are allowing 6 months moratorium, but another 6 months by 31st March 2021, you have to pay this amount. So it's a catch-22 situation. I am going one by one, what will be happening in the coming months. Now, accordingly, all subsequent installments will be get deferred by 6 months. Similarly, RBI also permitted that export credit, you are all probably knowing export packing credit and post-shipment, both pre and post-shipment credit, they have also given relaxation. Okay, export packing credit matlab, people, they have raised loan for the purpose of export, but under any circumstances, they have not been able to export. Since they have not been able to export, they will not be in a position to get the revenue and get his export packing credit adjusted. In that case, RBI said, okay, we are permitted, let your current account debited for the interest amount, and after 31st March 2021, you will, within 31st March 2021, you will pay this amount. Get the OD generated in the current account. Similarly, in post-shipment credit also, borrower has already exported, bills raised, but payment is not forthcoming from the overseas country. In that case also, RBI has given permission, okay, you will get that definite time frame provided your counterparty at overseas accepted that. So in that case, in both export credit and domestic credit, RBI given permission for 6 months moratorium for loan. This is the third announcement given by RBI. Now come what happened after September. Just see what will as per the report we are getting 1 out of 3 borrowers, mind that 1 out of 3 borrowers approach for extending initial moratorium period. It is, I am talking about April figure. Even salaried class who are initially very reluctant to take the moratorium, I am talking about personal loans, home loan, car loans, gold loans, all other loans. Even salaried class who are initially reluctant to avail moratorium, now in the mood of conserving cash. They are also in the mood of now conserving cash. Fear is that there may be salary cut, there may be job losses. So these are also increasing the moratorium of loan. As per Moody, about 70% of our public sector banks loans portfolio is under loan moratorium right now. Now, why borrowers are opting moratorium? What is the reason? As per this report, 41% is facing cash crunch. 33% is want to conserve cash. That I am telling, conserve cash. 23% expecting there may be salary cut or job losses. And 3% others. Though Mr. Pal, Dr. Pal has given some example, I want to highlight one simple example of home loan and one credit card loan. Home loan, say you have raised 50 lakhs home loan with 8.50% of interest for 20 years during the month of May 19. Now, if you defer 3 months moratorium, matlab you intend for 3 months initial moratorium, then the unpaid interest, if we consider EMI is 43,391, then the unpaid interest over a period of time along with the installment will jump up to 4.48 lakhs as against 1.30 lakhs 3 months of EMI which you are deferring. It will jump up to 4.48 lakhs if your repayment tenure is 20 years. These, you just think of the tremendous amount of pressure will be on the borrower if they opt for moratorium, since there is interest over interest component is there. Then come to on credit card. It has been observed interestingly that in credit cards, only 10% of the people are approached for moratorium. Obviously, you know, credit card is not a normal loan. Credit card user face a different set of options since once moratorium ends. Unlike normal loans, card users cannot escape high interest charges simply by paying of the accrued interest. You know, every month, whatever minimum amount you have paid. If you not paid in an amount, the residual amount, they charge a hefty interest. The same thing is there. They have to pay full outstanding balance to avoid higher charges. A credit card bill of say 50,000 can zoom 26.5%. Just think of 26.5% in 6 months moratorium. If one opt for 6 month moratorium of a 50,000 credit card dues, if we not purchase anything within this period, it will zoom to 26.5%, taking 3 to 4% per month interest on the credit card dues. This is the danger of moratorium. Now, what will happen after September? It is fast approaching, another 2 days time. What will happen when the moratorium will actually lifted? What is the option available to the borrower? The option available to the borrower, that borrowers who must have taken the 6 months moratorium can pay it at one shot, or ask lenders to add this to their existing installments. They have also the option of converting interest accrued during this moratorium to a separate loan. Alternatively, borrowers can keep the EMI unchanged by the loan tenure can be extended. But if you request me what to do, my suggestion is borrowers should aim to prepay the EMIs within the next 12 months. Prepay 120%. Matlab, if your EMI is 100%, pay 120% during the coming 12 months, so that you can manage after within 6 months time, you can follow original repayment schedule. So you have, for example, if you deferred 5 EMIs, prepare 6 additional EMIs over the next 12 months. This will help you to bounce back in your original repayment schedule and get out of the debt quicker. Now, everybody wants to know what will happen after 31st August. Whether borrowers are in a position to pay the amount which is deferred, which RBI has given time up to 31st March 2021, whether industry is growing, whether the effect of pandemic gone away. No, nothing has happened. Everything stands still right now itself. So now, to come out of this situation, RBI announced one-time restructuring. RBI announced one-time restructuring across the board to all sections of customers, right from corporate borrowers, right from MSME borrowers, right from personal loan borrowers. They have permitted one-time restructuring, for which they have given time additional 2 years. मतलब अगर आपका अभी 10 years है, if you are 10 years of tenor loan, so it can extend up to 12 years. So if your left out period is 5 years, so it can be go to 7 years, and accordingly your EMI will get adjusted and it will be structured accordingly. It will be ease on the part of the borrower to pay. But one catch is there. RBI said that only those accounts will be restructured where overdues is not more than 30 days. Think of. Only those accounts should be eligible for restructuring where overdue is not more than 30 days. In today's context, you can think that everybody, we as a banker, we know that most of the loan, 70% of loan is overdue more than 60 days. We are only managing, we are just servicing the interest or installment of the last month, so that account should not fall into NPA. So this issue is now taken up by the authority. All the government is also taking with the RBI that this 30 days norm should be at least 60 days, so that more and more borrower should come under the purview of the restructuring. One dangerous effect is that as per stressed asset scenario, test scenario of RBI, presently 8.5% is the NPA of the bank as of March 20. With all probability, as per the RBI, it will go to 12.50%. If it further worsens, then it may go up to 14.70%. So NPA. So this is the position we are facing. Even CRAR, your capital risk adjusted ratio, that capital adequacy ratio, there should be tremendous impact of the capital adequacy ratio if the things are going in that direction. And there may be sub banks who may breach the capital adequacy ratio until they are properly capitalized. So these are the restructuring effect. And subsequently, I want to highlight certain issue of the post pandemic and my concluding comments one by one, which will definitely give you some insight what is happening post moratorium in the banking sector. Loan moratorium will only defer but not solve the economic crisis faced by business. The government needs to infuse liquidity in the system. As a starting point, the government, which is the biggest purchaser of goods and services, should pay off its liabilities to the private sector. Bulk of this money would find its way back into banks as repayment of loans or improved cash flows for running the existing activity. There are two major issues that emerge from the pandemic. One, there is cash flow crunch, and another is huge load of fixed cost. You just, company is running, company's establishment cost is there, but no inflow, no cash flow. So moratorium, what do moratorium do? Extension of loan repayment only take care of the cash flow crunch. Then what about this fixed cost? Who will take care of this fixed cost? So full help of the loan moratorium would be useful only when, if the enterprises able to generate certain cash flow during this moratorium period, or there is loan interest waiver. Else you are just postponing and accumulating the burden of the with no overdue in these accounts, as already mentioned by one of our previous speaker, that RBI, or in that sense all banks in our country, are dead against loan interest waiver for the interest accumulated during moratorium period, as it will not only hit the profitability but at the same time vitiate the recovery culture. Approx 2 lakh crore blow for 6 months if interest on moratorium itself can be taken into consideration. However, our Honorable Supreme Court has previously said that there is no merit in charging interest over interest. I am also of the same opinion. There is no merit of charging interest over interest. And the matter is lying pending at Honorable Supreme Court level, and Supreme Court seeks center response on interest waiver and adjourned hearing September 1. After that, only we are able to know what is happening in interest waiver. My third point is credit is going to be a key facilitator for post-COVID economic surveys, because RBI is saying, government saying, free flow of credit is working capital financing, is financing. And at the same time, we are going for moratorium. Now, what will happen? That we are disbursing loans at the same time we are giving moratorium. So it is more useful to look at the more one-time loan restructuring rather than going for moratorium in one hand and giving loan in the other hand. There is no need for any further extension as per me. Whatever done up to 31st August, done. The industry and borrower need to deal with situation at hand by cutting costs, selling assets if needed. Further moratorium will lead to pushing the problems for later and will be even tougher to solve. I also see a moral hazard problem where able borrowers will refuse to pay when they have the opportunity to avail of the moratorium. Given the fact that impact of moratorium is still uncertain and evolving, the exact nature of how the same will play out on the quality of banking assets is difficult to ascertain accurately. But the facts remains that the outlook on asset quality and health of the capital is still clouded, and RBI is not offering any clarity on this. The moratorium is intended to help debt exposed borrower, but it also has an effect on the current lending activities of the banks. The banking sector NPA as a share of total advance could rise by a big number, as I have already stated earlier. As per RBI's state reports, bank will see 12.5% as of March 21 NPA from 8.5, and worst effect scenario, it may go up to further to 14.75%. Under the base case scenario, as per the rating agencies, loans to retail and MSME will be worst affected. Loans to retails and MSME. So, in addition to already clocked corporate NPS, you are all aware that our banking system is struggling with corporate NPS for the last couple of years. It will still continue. So with this, the central bank report said that the moratorium suppressed the real amount of stress on the loan books of banks, and half of the banking system loan book was under moratorium in April, though it is gradually decreasing, marginally decreasing in the coming months. Bank will be under pressure to proactively augment capital soon, but weak banks will find it very difficult to attract investor interest unless the economy finds a way to rebound. The moratorium therefore represents a double-edged sword. Yes, it helps enterprise for now, but is it just postponing an eventual negative consequence? And with the banks burdened as they are, how they will confront the forthcoming past due debacle? Will the regulators, lawmakers, and policymakers provide some kind of relief? The future will especially be a concern for the smaller banks. It is reported that SBI and other public sector banks need approximately rupees 2.1 lakh crore capital over next 2 years from the government. Finally, once we told the people, don't pay, it become hard to get them back into payment habit because they have not saved any money. In fact, they don't have any money. I will end my deliberation with one statement which I used to say, Gita in credit. Security cannot pay. Listen carefully. Security cannot pay, only cash can pay. In other words, cash is the king. Thank you very much.
Thank you for such an enriching session, sir. Through the deliberations, you have thrown light on very vital areas of banking in the Indian context in the most comprehensive and articulate manner. The practical illustration and your concluding remarks have clarified the concepts to a great extent. Thank you once again, sir. Moving on, we would now like to invite Dr. Debaprashanna Nandi, Senior Director at the Institute of Cost Accountants of India. Sir is also the Chief Executive Officer of the ICMAI Registered Valuers Organization. He has also served as the Institute Director in Examinations and also in Research, Journal, and Publications. He is also a member of the Operational Research Society, UK, and the Indian Public Health Association. He has vast experience in the industry, as well as in teaching and in research. We are honored to have you, sir. I would now request you to kindly address the participants of the webinar. Over to you, sir.
Thank you so much. We are privileged to be associated with prestigious college, St. Xavier's College of Kolkata, one of the renowned college, not only in Kolkata and West Bengal, in the entire India. Reverend Dr. Dominic Savio, our president of the institute, CMA Balvinder Singh in absentia, CMA Vishwarup Basu, vice president, Professor Sanjeev Kumar Basu, dean, and our two eminent speakers here, Dr. Taposh Chandra Pal, CFO of Mercantile Bank Limited, Bangladesh, and Sri Chanchal Majumdar, GM Credit, retired GM Credit and Recovery, UCO Bank. So now just what we have heard from these two stalwarts in the banking industry. So I think I have nothing to say as a moderator on these two aspects because they have already explained in a very lucid way. So this moratorium was only a short-term measure taken up by the government immediately after the spread of COVID across India. And now 31st August is the last date. So it has already been 6 months from the date of announcement. So our guests and speakers, they have already said, so there is no need to extend this moratorium because it will have some adverse impact in the economy in the coming days if it is continued. But anyway, it was done well at that time when cash flow was required in the hands of these borrowers. But now in terms of NPA and other issues in the banking that they are facing, so that will be tantamount if this is continued. So this short-term measure was good for the time being, and now it has come to take some measures by those organizations because this COVID-19 that has come and that will stay as per the WHO. So the organizations, individuals, everybody has to find out their own way so that we can live in a new normal position, new normal situation in a better way. So these threats or these challenges should be converted into opportunities, or at least we should treat all these challenges so that we can face all these things. So one of the measures that my earlier speaker, Mr. Chanchal Majumdar, has already said that the companies, organizations, they have to take some innovative measures, managerial measures like cost cutting and etc. So in this respect, so what I have intended here that our institute, the Institute of Cost Accountants of India, they are the regulator, prime regulator in cost and management accounting in India. and not only in India, in the globe, they are having their own position. So with this institute and with our regulatory power, we can have some pivotal role during this time. So I think I have a presentation about various activities and various things that we are doing. And during this COVID situations also, we are progressing with this. So I have a small presentation with me. I would like to share my screen with everyone so that my discussion will be more lively. And next few minutes or maybe 15-20 minutes or so, we'll have a very gainful interactive session. So I think moderator, I can share my screen. Is
Yes,
it okay?
yes, sir. Yes, sir, you
Okay.
may.
Thank you. Thank you so much.
Thank you, sir.
Which option, madam? This is share and document.
Yes, sir. If it's a PPT, then the presentation will get shared directly,
Document.
or if it's a document accordingly.
Is it visible, madam? Coming?
Not yet, sir.
Is it coming? No.
No, not yet, sir.
Acha, can I do my whole screen? Can I share my whole screen? Is it possible from here?
Yes, sir.
Actually, it is not available in the share. Microsoft Google Drive document, bookmark and share whiteboard. There is no share screen.
Just a minute, sir.
Can you allow me to share my screen?
Yes, sir. Just a minute. So are you getting the option? Is the share button green for you?
Yes, that is there.
So if it's green, then you're having the rights already.
But that sharing screen is not there. Sharing document is there. But it is only from the drive. Yes, I think I have got it right now through this drive.
Yes,
Is it,
yes,
is it
sir.
visible?
Yes, sir.
Yeah,
Yes,
yeah,
sir.
yeah.
Yes, sir. Yes, sir. It's
Okay,
visible.
thank you. It has come in a different way. Okay, thank
Yes,
you
sir.
so much. So I talk about our cost and management accounting course a bit. So that may be a measure during this time of COVID. So what Sir has typically rightly said, that cost cutting and cost reduction, or cost management rather, that would play a vital role, pivotal role during this period of COVID. And moratorium type thing are mainly short-term measures. Okay, that cannot be a long-term issue. So, but cost management may be a long-term device or long-term measure for the benefit of the society and organization. So our institute basically, this is the Institute of Cost Accountants of India, which was earlier my president already has defined that it is more than 75 years old, and it is situated, headquarter is situated at Kolkata. It is basically regulating cost and management accounting profession, and it is under the administrative control of the Ministry of Corporate Affairs of Government of India. Along with, it's a founder member of many international bodies like IFAC, Confederation of Asian and Pacific Accountants, and South Asian Federation of Accountants. So actually, this institute was born during the time of Second World War. You know, any crisis that will create some good things. In 1944, when the Second World War, India and Kolkata specifically, it was under the clutch of this Second World War, and at that time, the price of everything was increasing very much. And regarding cost plus contract issues, this costing and cost management thing came, and an association like Cost and Management Accounting Association. At that time, it was known as ICWAI. It has formed in the year 1944, although it got recognized by the Parliament in 1959. So long, 61 years back. And in 2012, it was renamed as Institute of Cost Accountants of India. Basically, the cost and works accountant, W, works, the abbreviation is W. Works means the factory, you know, the commerce people, that factory. Earlier, what happened, this cost and management concept was only limited with the factory and its and this manufacturing sector. But especially after 1991, this liberalization, globalization takes place. We think that, or not only thinking, it was there actually, that the role of costing, the use of application of costing was in or is in service industry also, like in the banking industry, maybe in the education, maybe in the hospital, maybe in the hospitality, maybe in the IT. So any type BPO, any sector which is relating to the service sector. So everywhere the costing techniques can be applied very efficiently. So that is why everywhere in the world, even in the Bangladesh, today we are having our guest, eminent guest from Bangladesh. It is known as Institute of Cost and Management Accountants, but in India it is known as the Cost Accountants. Everywhere in the world it is known as Cost and Management Accountant. That is why the Cost Accountants, they put in the before their name, like doctor put their before their name DR. In the same way, the Cost Accountants put CMA before their name as Cost and Management Accountant. So this is the mission, vision, and motto. Our motto is to Ashatama Asad Gamaya Tamoshuma Jatit Gamaya. Okay, so from ignorance lead me to truth, from darkness lead me to light, and from death lead me to immortality. Peace, peace, peace. This is our motto. This is the objective, basically, to use this cost and management accounting tools everywhere, every sphere, and create a pool of professional members, those who will be devoted in the economy for the development and the latest development in cost and management accounting, along with using basic ethical standards involving research and publications, publishing books. These are the basic objectives of the institute. So institute is the largest cost and management accounting body in Asia presently, and the second largest CMA body in the world. That is the stature of the magnanimity of the institute in the global scenario. Basically, presently it is having more than 5 lakh students and more than 85,000 CMA professionals, those who have passed and qualified, with its headquarters Kolkata and corporate office at Delhi, along with its 107 chapters, 4 regional centers in all the metro cities, 10 overseas centers, 2 centers of excellence, 51 support centers, and 434 recognized oral coaching centers, along with 133 exam centers. So this is the stature of this institute. But one good thing that I want to share with you, we are having 3 stages of examination: foundation, intermediate, and final. Our foundation examination is the first time in the history of any professional institute in India. We are conducting from 6th of September home-based examination. So this is as per the instructions of the ministry, as per the instruction of the government, and we are taking the best effort and best possible organizations through which we will be doing home-based examination, and we have become the pioneer in this home-based examination. And we have, in that way, we have conquered the COVID situation, and so that the students, they will not face any problem. And even, you know, the Supreme Court has their verdict that within September the examination has to be started or done. So in that way, we are in the right direction to start the examination, home-based examination. So this is one of the significant things we have done during this COVID situation. So these are the core strength of our CMA profession, that is building cost effectiveness, enterprise governance, regulatory landscape, management control system, business analytics, strategy, and sustainability. You know, this cost and management accountants, they are more on the strategic issues, managerial issues, rather than other accountants, because mostly accountants are like they are doing something like post-mortem. But we diagnose the thing, we diagnose the issues, we review the issues and revisit the issues, and we take out some solutions out of that. That is why benchmarking, this business valuation, everywhere, cost and management accounting, financial management, and even the taxation, direct and indirect taxation, wherever there is a role for any management thing, management consulting, management issues, and strategic issues, our cost and management accountants are the experts in these areas. So the main course of the cost and management accounting. So these are basically based on these employable skills. And our thing is that our course can be continued with other courses, along with other academic and professional courses, and even with your job. If somebody is involved in job, they can also do it. That is a earn while you learn. So there are basic skill sets we require: knowledge, comprehension, application, analysis, synthesis, and evaluation. And it is based on 6 major pillars of management strategy, 4 major pillars: management, strategy, regulatory function, and financial reporting. All our curriculum, all our syllabi that is been devised on the basis of these 4 pillars. And our course curriculum is based on the international bodies recommendations, based on UGC curriculum also, as well as we prefer to give weightage the state boards and central boards course. And finally, that is the major thing, that in every 4 year we change our syllabus and curriculum as per the industry requirements, as per the industry suggestions, and the suggestions of the renowned academicians, maybe from IIMs, maybe from all the big schools. So their suggestions we accumulate, and we took effect of these suggestions in our course curriculum, so that our students become future ready. So this course can be completed in 2.5 years also, and it's a working personnel, they can also do it, because there is no bar of doing this course. Can be studied along with any other courses and ready to serve the industry. Even foundation and intermediate qualified students are capable to serve the industry. So it is devised on the basis of 3 stages: foundation, intermediate, and final. Foundation, they can start after class 10 and they can give examination after class 12. And intermediate, after passing foundation, or we are having CAT CAT course. Graduates are welcome in the intermediate course, ICSI foundation, or even the CA intermediate, and engineers, qualified engineers, they are also capable to do this intermediate course. And final courses are available only for this intermediate CMA intermediate pass out students. They can go for the final course. This is the course content: foundation, basics, economics, management, accounting, laws and ethics, and in the 4th paper, mathematics and statistics. This is very basics as per your ICSI curriculum. And in the intermediate also, you'll see similarities in your graduation BCom, BBA classes, like financial accounting, laws, ethics, direct taxation, cost accounting, organization, operations management, strategic management, cost management accounting, indirect taxation, company accounts. Okay. So from final, actually, there are some deviations, means some higher degree of higher level of study. All are in the strategic format. We have learned about course here, the strategic financial management, strategic cost management, even direct tax laws and indirect taxation at its best, and this corporate laws and compliance as per Companies Act 2013. As well as in the final last stage, we are having corporate financial reporting, indirect taxation, cost and management audit. This is our domain area of a cost accountant, this cost and management audit. And lastly, strategic performance management and business valuation. So this is these 20 papers a student has to cover to become a CMA. And if they comes to direct route from intermediate, they can start. So that will be 16 papers. So this is the total CMA curriculum as such. So now this is the most interesting area that I want to highlight here. From this August onwards, students will be given an opportunity to avail this world-class training facilities for all CMA students. That is why we have incorporated in our intermediate level SAP training of 60 hours, as well as soft and techno skill training of 80 hours. And we are having our practical training. This is 15 months practical training that can be started from intermediate level, and it will take you through the final level before sitting in the final level of examinations. Along with, we are having industry-oriented training program. So what is this training program, this world-class training program? You can see here, SAP training. It's a 60 hours training that is embedded with our course curriculum. SAP Finance Power User course, along with the SAP Learning Hub, where we'll have more than 2,000 learning content, e-learning content on SAP and other management cost and management accounting, along with global certification opportunities. So this is an extremely useful and valuable training facility that our institute they have able to pull up for the students. So this is the SAP training, and as well as what our president already said, that from our institute side also they will be teaching the students another 60 hours of training so that they can understand these things in a more better way. As well as employability and soft skill training, we are having tied up with Microsoft Education and its certification in all the three aspects. Your Excel, Microsoft Excel, PowerPoint, and Word, as well as we are having Cambridge University Education and its certification in the soft skill area, and the e-filing means all the e-filing, maybe GST, maybe direct taxation, maybe digital signature, everything. E-filing system will be complied, and it will be given through 80 hours training facility to the students. So that has been embedded in our syllabus. And along with this, we'll give another 60 hours support, knowledge support with live online classes on all these areas, recorded classes, webinars, projects, and assignments. So in total, 200 hours of employability and soft skill and this SAP training will be provided to the students along with their normal coaching supports. So everything will be monitored nowadays with this COVID situation. We are monitoring everything to world-class SAP Learning Hub, through which all your assessment, everything progress will be monitored along with your practical training of 15 months. So last year we are having around 60,000 admissions across the globe, and 1 lakh students appeared in CMA examinations in 1920. So this is the percentage of pass percentage in foundation, around 80%, in intermediate around 25%, in final around 19%. This was the last December 19, because you know our pass percentage is bit lower. You feel like unlike the graduation, because our students lie in between different various stages and various phases, and our minimum pass percentage is 50%, and it requires huge devotion of your study and utmost sincerity in the course content. Okay. So with this, our course fee is very minimum. In foundation, we are having only rupees 6,000, intermediate 22,000 with 2 installments, and final 25,000. That is why we say that total cost of CMA course, that is only 53,000, is even less than the interest cost per annum on loan taken for higher education purpose, like any MBA like thing, that may cost around 8 to 10 lakhs rupees, and it is only the interest component of that. So this is the course fee, which will give you entire course material, all the study materials, all the coachings, maybe online, maybe offline, all of your these world-class training facilities, practical training. These are all inclusive of this course fees. And along with this, we have having some financial aids and scholarship for meritorious students, economically challenged students, minority scholarship, and government scholarship, and physically challenged students also. And with this, our career opportunities are immense for a cost accountant. They can serve in the industry, maybe in the academia. They can go for practice. They can start their startups, own entrepreneurship. And you know, in the administrative service, I want to highlight one point. Indian Cost Accounting Service, there is one service in the central government that is known as Indian Cost Accounting Services, where the cost accountants are majorly employed under this cost accounting service because it is in their name only. And you know, this is as good as an Indian accounting service, like Indian administrative service, like IS service. Okay. So apart from that, we have many identified areas like finance, accounts, taxation, project management, internal control, banking, resource management, everywhere, academia, project, risk management, everywhere we are having our footprints. So our yeah, next slide. So our important job roles are the topmost positions in an organizations who are in the strategic role. They are mostly cost accountant, cost and management accountants. You can see everywhere in the globe. Maybe the CMD, CEO, CO, director of finance, vice president, head of finance, strategic head, financial controller, risk manager, research analyst and the dean and professor of finance in the university colleges, and many more. These are the lead roles where the CMS play an important role in any organization. The opportunities in practice also is immense. After 2013 Companies Act, the cost auditors roles has been increased tremendously. Internal auditor, they can do internal audit, they can do GST audit, they can act as an insolvency professional, they can act as a registered valuer, loss assessor, tax consultants in certain areas, arbitrator, financial services, information system audit, and many more consultancy services. So there are immense scope for practicing, individual practicing for a cost accountant and independently. And as well as in our campus placement, that is in last few years, we have been witnessing that huge upward movement in the highest package, maximum package. They have been offering 20 lakhs per annum by expending only 50,000 for the total course, and 8 lakh was the minimum package, where public and private sector organizations both participated, and public sector are our major stakeholders in our campus placements. So these are the few list of like ONGC, SAIL, Indian Oil, okay, GAIL. So these are the companies, and again ITC, Tata, Max Life, KPMG, all the companies you can see, Cipla, medical, any field, in IT field, in banking field, in consulting, in industry, manufacturing, service, in PSUs, Coal India, all the companies, they used to visit our campus placement for the students. So now everything, today only our presidents are already announced today. It's a very effective day today, and we have already launched our new portal, and all the services, student e-services, everything is under one umbrella, and we can have everything in under one portal. So this is totally online, our course, curriculum, services, everything. So beyond CMA course, apart from that, we are having advanced studies course. I'm just rushing through the slides. We are having data analytics course for the finance professionals, SAP course, certificate course on arbitration. We do have course for the engineers, cost and management accounting for engineers. These are all value addition courses. Apart from that, we are having executive diploma in business valuation, diploma in management accountancy, certificate course in advanced Excel, and these are also in the pipeline, certificate course in IS audit, in financial modeling, forensic audit, and Ind AS. So apart from that, taxation department also we are having. They are having many courses on GST, TDS, e-filing, courses for GST courses for college and university, okay, GST audit and income tax assessment. And also a banking department, they are having courses on concurrent audit for banks, credit management of banks, and certificate course on treasury and international banking. These are all value addition courses. After completing, or those students who are in the final course, they can have the opportunity to avail those courses. And apart from that, we are having a registered valuers organization. Myself is the CEO of this organization. So it's now becoming a big organization. Now, you know that under Insolvency and Bankruptcy Board, all the valuations are coming, and we are already having more than 250 registered valuers and more than 1200 valuer members with us. So this is another opportunity where the valuation courses has been done. And this is another organization within our organization that is known as Insolvency Professional Courses or Insolvency Professional Association. This organization or agency, they are working, they're doing exceedingly well under our umbrella. And this is our chapter network: Western, Southern, Northern, and Eastern. Almost 110 chapters presently under this umbrella. And this is the regional offices of 4 regions. And these 10 overseas centers we are having: Bahrain, Botswana, Canada, Dubai, Muscat, Nepal, Singapore, Tanzania, Washington, and Zambia. So this is the overseas centers of the institute. This is press coverage. And lastly, be a CMA, be a proud Indian, be an enabler for self-reliant India. And with this, I end my presentation here. So this is my short presentation, so that during this, what my earlier speaker has told, the cost cutting and all those things, cost management. So I took that clue from there, and I presented what the cost and management accountant can do in this field, in the arena of cost management, cost cutting, cost reduction. And I welcome everyone. And I thank you and congratulate the team, St. Xavier's, for conducting such a beautiful international seminar in this evening. So thank you so much for giving me the opportunity.
Thank you so much, sir, for the information and for the detailed demonstration. As you mentioned, it was indeed very lively, engaging, and pertinent. Thank you once again. Now we move on to the question answer session with respect to the two technical sessions that we had earlier. Here, we have put together a list of questions posed by the participants attending this webinar to both our eminent speakers, namely Dr. Taposh Chandropal and Sri Chanchan Mojumdar. We take these questions up one by one. The first question is addressed to Dr. Taposh Chandropal. Sir?
Yes. Yes.
Yes, sir. Thank you, sir. If deferred EMI payment leads to accumulated interest, don't you think that financial institutions should give the borrowers an option to accept the moratorium on loan payment?
Yes, I think it's a deferral payment only, nothing more. That's why it's a accrued interest will be added to the principal. That's why everybody knows deferral moratorium period only for the deferral time, nothing more. It's extend to 90 days to 60 days. It's depend to the institution as well as the country's aspect, nothing more.
Thank you, sir. The next question is addressed to Sri Chanchan Mojumdar. Sir?
Yes, please.
Sir, what is the effect of moratorium on the Indian financial system?
As I informed in my deliberation that it will have huge impact. That's why RBI is come out with the restructuring options. As because it is now absolutely clear, no borrower is having money to pay their deferred installment in the coming 6 months time. So RBI is giving 2 years, then again 2 years of repayment moratorium, so that their loan can be restructured. This is so far the borrower's concern. Number two concern is Indian financial system, Indian banks, NBFCs and all that. Already NBFCs are suffering as because many NBFCs, they are not deposit taking. So they used to take loan from someone and give loan to others. So if their fund is stuck in the month of 6 months of fund is stuck, it is very difficult to maintain liquidity and go for further advances. And so far Indian banks is concerned, they are so far big banks are concerned, they are having adequate capital adequacy, they can save the situation. But the small banks, it's very difficult to maintain that capital adequacy at the prescribed level.
Thank you so much, sir. Sir, once again, there's another question addressed to you. The question is, what is the present loan interest on housing loan? Is there any cutoff? What is the moratorium effect in case of the common masses?
Actually, it differs bank to bank. Home loan, there is no standard rate of interest in any banks. Every bank is having their own cost systems. Now RBI is come out with MCLR system, marginal cost lending rate. Every bank having their marginal cost lending rate, and accordingly, as per MCLR, they arrived at the what type the rate they will offer. But as of now, it varies bank to bank in say around 7.5 to 7.75 or 7.40 to between 8 home loan.
Thank you so much, sir. The next question is addressed to Dr. Taposh Chandropal. Sir, may I?
Yes, sir.
As the interest accumulates, would it not mean that there is a need of remodeling the loan so that it is easier for the customer to pay?
Yes, because of nowadays, we are passing a critical moment. That's why restructure and remodeling will be needed. Otherwise, the customer and the financial institution will not be run properly. Thank you.
Thank you, sir. So once again, a question addressed to you. What is the clarification that has been given by the central government for the interest due during the moratorium period?
In our country, 2 months interest deferral by the government at present, as well as the government also declared the 1% interest will be paid by the government as subsidy in our countries. This is the scenario of Bangladesh. On the other hand, the deferral interest, like at present, our interest rate is 9, where the government subsidy paid as subsidy 1%. Another 8% will be bared by the customer, which will be deferred. Deferral scope is depends to the customer and bankers relationship. Okay.
Thank you. Thank you so much, sir.
Thank you so much.
Sir, the next question is addressed to Shri Chanchal Majumdar. Sir,
Yes, please.
Thank you, sir. The RBI speaks about a 10% provision. What is the purpose of this provision, sir?
It's very interesting question. You know that when bank is financing, bank is running the risk. Any finance, any advance risk involved with it, that it may come, it may not come. So RBI always see, or any regulator in any country, that bank should have that sufficient liquidity to withstand such a situation. So RBI said, okay, I am allowing you to extend moratorium. Matlab, otherwise this account will be NPA if not moratorium extended. Account will be NPA. अगर account NPA हो जाता तो कितनी आपको provision करना पड़ता है? As per Indian law, 15% you have to provide. So in that case, say, okay, account will remain standard in its books, but you have to provide 10% so that when moratorium will be over, any unforeseen sin happens, if the borrower is unable to pay, then at least you can sustain to a bit. That's why the provision, it's absolutely a cushion given so that to avoid any untoward incidents.
All right. Thank you so much, sir. Once again, the question addressed to Dr. Tapas Chandrapal.
Okay.
Sir, how does the interest on moratorium period affect the cost of education loan?
It depends to the internal bank arrangement. Bank is depends on the bank to bank policy. At present, our country aspect has loan interest is 9 only. That's why if the bank needs or wants, it would be higher, lower than the prescribed rate, may be allowed.
Thank you, sir.
Hello.
Thank you so much. Yes, sir. Thank you. The next question to Dr. Chanchal Majumdar. Sir, the question is that is moratorium for the benefit of the borrowers or for the bank?
Very good question again. In my opinion, it's a win-win situation for both in temporary phase. It's a win-win situation for the both in a very temporary period, but in the long run, it's bad for both the constituents, as because borrower not generating sufficient cash flows. In the long run, when interest will be accumulated, it is very difficult for them to pay, and the account with all probability will gone into NPA. And other words, for the lender's point of view, they are not been able to generate sufficient liquidity because their fund is stuck up, so they are not been able to provide loan again to some other persons. So for temporary period, it's good. For such a situation, in the long run, something concrete like restructuring has to be undertaken. Otherwise, it's bad for both the parties.
Thank you. Thank you so much, sir, for clarifying this concept. The next question is addressed to Dr. Tapas Chandrapal. Sir, how will the banks receive the extra interest?
Through installment.
Thank you, sir. The next question is again for Dr. Chanchal, Shri Chanchal Majumdar. Sir, how to check the credit score or the CIBIL score after being waived off the charges?
After being
Waived off the charges.
it has already been clarified by RBI that this moratorium will not affect CIBIL score. I have forget to tell that in my deliberation. In one of their directions, RBI said that it will be moratorium will be treated as a good regular borrower, and it should not reflect to CIBIL score. So borrowers, so that people are unnecessarily not harassed by the CIBIL default.
Okay, thank you so much, sir. Sir, this is a general question. It could be taken up by either of you. The question goes, how is the COVID-19 impacting the savings of people? Will it decrease the total purchasing power of the economy?
Me?
Yes, sir, either of you could take it up.
You repeat the question again.
So how is the COVID-19 situation impacting the savings of people? Will it decrease the total purchasing power of the economy?
I am absolutely on that. It will definitely increase the savings, as because I'd say that people will conserve cash. People will conserve cash. It will definitely increasing the savings. Already reports are showing, and at the same time, the consumer habit also changing. People started saving more and more.
Right, sir. Thank you so much. So once again, another question addressed to you, Dr. Chanchal Majumdar. Sir, we would like to know, how will the interest be charged and recovered for SME, MSME businesses which use cash credit or overdraft facilities?
How did we charge? Processing charge? You are telling about?
No, sir.
There is no entry. There is no entry fee charge. This is called processing charge. What do you mean actually, please?
No,
please
sir.
repeat.
I'll repeat the question. Yes, sir. How will interest be charged?
Interest
and recovered for the small and medium scale enterprises or the businesses which use cash credit or overdraft facilities?
Very good. So there is no other norms for any loan or MSME. Interest have to be by default. It will be charged on monthly basis, and you have to recover on monthly basis. Be it term loan, be it cash credit or overdraft. You need not pay the installment, as because it's a working facility. You have to serve the interest. In term loan, you have to pay the EMI or term loan installment, whatever may be, and interest to be charged, interest to be paid as and when charged. In loan agreement, it was written in everywhere that interest to be recovered as and when due. So interest in all banks, other than agriculture advances, it is charged on monthly basis and it is recovered on monthly basis for all term loans, working capital loans, cash credit, overdraft. It is charged on monthly basis and it is recovered on monthly basis.
Thank you so much, sir. So the last question is addressed to Dr. Taposh Chandrapal. Sir, if the borrower has multiple borrowing facilities within the same lender, can he or she get a blanket moratorium?
No, it is impossible. Only for the term loan, not the other loans. The practice is our country, only for the term loan. Moratorium period is allowed, like house building loan and industrial loan, nothing more.
All right. Thank you so much, sir.
Okay.
Since we are at the brink or at the verge of completion, so these are the questions, a few questions that we could list from amongst the questions posed by the participants. Thank you so much, Dr. Taposh Chandrapal and Shri Chanchal Majumdar, for addressing each of the questions so concisely and encompassing all related aspects. It was indeed a great way to end this one-day international webinar. Thank you so much, sirs.
Thank you. Thank
you very much.
Thank you, sir. I would now request Dr. Shoili Ghosh, Dean of the Department of Commerce Evening, to kindly deliver the vote of thanks. Over to you, ma'am.
Thank you, Professor Ruby. Am I audible to everyone?
Yes, ma'am. Yes, ma'am, you are.
Okay, thank you. So it is my privilege to propose the vote of thanks. At the very outset, I thank Reverend Dr. Nick SJ, Principal Xavier's College, Autonomous Kolkata, for his vision, guidance, constant support, and blessings. Thank you, sir. I thank Reverend P.R.O. KSJ, Vice Principal, Department of Commerce, EFU, and Business, for his constant support and encouragement, and always helping us in every possible way for organizing this webinar. I thank Reverend J. Kulla ISA, Vice Principal Commerce, for his support and encouragement, and also helping us in organizing this webinar in this manner. I also thank Reverend J. Padira, SJ, Vice Principal, Raghupur Campus, for his support and encouragement. Thank you, fathers. I thank CMA Balwind Singh, President, Institute of Cost Accountants of India, for his collaboration, support, and cooperation. I thank CMA Bishop Basu, Vice President, Institute of Cost Accountants of India, for this collaboration. I thank Dr. Prashananon, Senior Director, Institute of Cost Accountants of India, for his constant support and encouragement, for his wonderful presentation on the importance and application of cost management as option. I thank the respective Deans of Commerce, undergraduate, postgraduate, DMS department for their suggestions, effort, and support. I especially thank our esteemed speakers, Sri Chanchal Mujumdar and Sri Tosh Chandra Pal, for their engrossing deliberations and for taking time out from their extremely busy schedule and being an integral of this webinar. I also thank Dr. Shah Agarwal, Director of Computer Center, Professor Rohit, HOD Department of Computer Science, and Dr. Joyati Adam, Faculty Department of Computer Science, for their immense support in all the technical requirements for this webinar. No webinar can be successful without active participation of its participants. Thus, I thank all the participants, faculty, students, researchers for their active interest and for these wonderful questions which have already helped us in gaining more insight about this authoritative institution. I thank everyone in the organizing committee for their relentless effort in work towards a common goal. A special thanks to the design and registration team who literally burned the midnight oil to design, verify, and upload the brochure, Google form, feedback form, certificates, and everything else. Finally, I thank the organizing secretary, Professor Ray, for presenting this idea and bringing it to fruition. And above, I thank Almighty for giving us another day to use productive, learn something new, and also share our views on the wonderful town. With this, I conclude my vote of thanks. Thank you all. Good night and stay safe. Thank you, madam. Over to you.
Thank you so much, ma'am. We would also take this opportunity to thank Dr. Shoili Ghosh, Dean of the Department of Commerce, Evening, for the facilitating the smooth functioning of this webinar together with our organizing secretary, Professor Saptarshi Dey. Thank you so much, ma'am, for your constant guidance and support. Now, with the kind permission of Father Principal, we come to a close of this one-day international webinar. Once again, thank you all for participating in this webinar and making it a grand success. We thank our speakers yet again for taking time out of the busy schedule and being a part of this webinar. Thank you to all of you. Stay home and stay safe.
Thank you.
Same to you. Thank you very much.